All right, everybody. Welcome back. Another great edition of Top Trades coming at you with our world traveler back in the hot seat, Enrique. How's it going?
I mean, I was Arizona. I don't know that I'd call it the world. So
Oh, come on, don't undersell it. You were traveling
I,
around.
I love Arizona. Don't get me wrong, but it's not that far away.
Well, we have no shortage of stuff to talk about today. It's earnings season. We're in the thick of it. A lot of mags reported last week. I want to get your take on some of that. Want to talk Tesla probably first, since you have some interesting Tesla stories to share. I'm very interested in hearing about that. We got a lot of growth stocks reporting this week. PLTR not looking so hot. I think expectations were just so high that it had nowhere to go. But also, I think we're seeing a lot of these stocks run up into some resistance. And this is just a normal spot to probably take some money off the table here in these volatile times. Some guy named Warren Buffett, I think, retired. I don't know if he was a famous investor, and I don't know if you have any thoughts about that. Maybe some talk about semiconductors too. I think we have AMD after the bell today. What that might mean for Nvidia, if anything. But I'll let you take it away. Tell me about your Tesla. I want to hear about
Well,
your
well,
Tesla experience.
so first off, let me start. I'll some context why we're talking about Tesla on the stock thing because I do think in my history as an investor, I have tried to be an aggressive, fast follower of new technology. So what that means is I'm never the first guy. Like I'm not the one who I didn't get a BlackBerry until it had been around for 5 years. I didn't get an iPhone until probably 2015 or 2016. But what I like to do is I kind of monitor things, and when I hear enough really like good responses, everyone raving about it, I get interested. And so I needed a second car, and Teslas have gotten really cheap. Musk blew up the pricing deck, and then everyone's like selling their Teslas. So I was like, everyone I know that had a Tesla was like raving about it, raving about it. And again, I heard a couple people had complaints were early on and they had battery issues, but since then, like, and even and these people are across the political spectrum. It's just they're gadget people, they're non-gadget people. So we went out and bought a Tesla. I'm going to tell you two things about it that was most fascinating, and I say this because I kind of knew these things, but until you experience them, you just have no idea. The entire process to buy the car, that start to finish, not counting the drive to pick it up, took me an hour, 15 minutes, and 20 minutes of that was on the phone with my insurance company. So I actually think I spent 50 minutes or 45 minutes. You go online, you pick the car, you apply for financing, you upload a few documents. I mean, it was crazy. I've never seen anything like it. And it sort of speaks, I think. I mean, I'm sure this is true for all the people on the call. If you're going to buy a new car, like I'm always like, okay, we got to go on Sunday, or we got to set 6 hours aside. The financing paperwork's going to take 3 hours, and most of it's you just sitting there doing nothing. Like I put up a chart on Twitter of a Ford stock price. Ford stock price is below where it was when I got on Wall Street in 1990.
Oh,
Okay, 35. And now there's been dividends, I'm sure, but like, if you ever want to wonder why they've been such terrible stocks, go through this purchase experience of buying a Tesla, and it's like, well, duh. The second thing, and I won't go too far with this. This morning I got up really early. I just got the car on Sunday, and you get full self-driving for the first 30 days, but I'll probably get it anyways. It's $100, which is, I don't know, like 6 beers in New York City. And so I'm like, okay, I'm going to try it. And it was raining. Okay. And I'm about 15 minutes from my gym. I did it, and I didn't touch the steering wheel the entire time. And it was amazing. Like, first off, I was like giggling like a little schoolgirl. Like, just I was like, sitting there. I'm like calling my friends at like 6:15 in the morning to put on the video. I'm like, dude, look, I'm not even touching it and stuff. But I guess the point about this is, let's bring it back to investing. Is, like I said, I've tried to be a fast follower. once I understand the technology, and by the way, I care about the environment. Don't get me wrong. My other car is a lifted Jeep that gets 14 miles to a gallon. So, I didn't come at this with any philosophical, political, or intellectual bent. I think it's great to have an electric vehicle. I think Musk is great. I don't really care about, I'm not political about any of that. What I heard was that the cars are awesome, the experience is awesome, and now they've gotten pretty cheap. But I would encourage you, because and I'll leave with this one last thing, is back in 2019, my partner Whitney Tilson and I wrote a promo called EVAV for about electric vehicles and autonomous vehicles. And we basically made the point that we thought autonomous vehicles were coming, soon. It didn't end up being as soon as we thought, but once they came, it was going to change, a lot / everything. Whoa, man. Yes. I mean, it's really amazing. So that was my Tesla experience. I encourage you, if you've got any friends that have a reasonably, I'll show you David Matthias. I'll show the head tattoos another time. If you've got a friend that has the full self-driving, I really encourage you to get in the car. I'm going to take my 2 kids to. We're going down to the Yankees game today, and they're going to freak out when we get in there. But it's an interesting experience, and I think it speaks to where the puck is going. I don't honestly have an opinion on Tesla stock. But I think this is I do have some opinions. This is a real testimony to the power of autonomous vehicles and the fact that our American automakers can be doing a heck of a lot better than they're doing right now, just from that whole sales process that I went through.
Yeah, I guess it's one of those things where it's little by little, then all of a sudden it's real. And I feel like that we're almost at that point with the self-driving. I can see, in the not too distant future, self-driving only roads and lanes popping up, especially on crowded highways and that sort of thing, to alleviate traffic and just expanding from there.
Well, they just started between Houston and Austin, I think, or Dallas. They just started putting a bunch of big rigs on that road, because I guess that's because you got the Port of Houston and they're just going back and forth. So there's 20 big rigs. I got to tell you, I don't know that you need I've looked at a lot of the data also. I don't know that you need self-driving only roads, and it was zipping. I just set it on the regular settings. This actually surprised me, is that it goes above the speed limit.
Really? So it's reason. I assume it makes reasonable decisions. It's not.
Oh, it makes better decisions than I do, I'm sure. Because it has more data. But yeah, it went above the speed limit. It was going in a 45, it was going 47, 49, things and there was a setting that you could, there was one called chill, one called, I don't know, normal or something. I don't remember what it was. And then one called hectic or whatever, in a hurry.
I'm late.
Chill, hurry, and whatever in the middle was. But yeah, when I was on there, I'm like, we're going 36 and this is a 30-mile-an-hour road. But like I said, I trust it better than, it knows, compared to what our ability to process data. Yes, we have some advantages, but net, I don't know the friction that's happening on the wheels. Supposedly I can feel it, but I not the computer. So yeah. It's, I'm not telling anyone to go buy a Tesla or an EV, but they're pretty cool. And, and again, I'm not a Luddite. I'm not against technology. I usually just take my time. I encourage everyone that's watching this, if you have a friend that has a Tesla, to just say, hey, can we go to lunch? And can you show me? Because I think it'll change your perspective just on a whole bunch of things. So
yeah. The one thing, and this is the last non-market thing I wanted to ask you about, is how do you, I guess it's a little bit of an adjustment, because I feel like I would be tempted to grab the wheel or something, because I'm in the driver's seat and things are happening around me. It must be a kind of a mental adjustment you have to make to sort of just let it go and do its thing.
Well, okay. I felt a bit of that. But I'm also in a small town, which I don't know if makes it better or worse. We're getting all the summer people right now. But you also can't really look at your phone, because whatever camera's in there is watching your eyes. And so for a bit there, imagine you're the steering wheel. I was doing this, looking at my phone.
Yeah.
And it's put your eyes back on the road, because it's still assisted. It's still assisted.
Okay.
So I was a little bit like, I was like going to the Yankees game today. I'm like, oh, I'm going to bring my laptop and like get some writing done. I wasn't really going to do that.
Right.
But you get used to it pretty quick. I mean, and I think it's like anything in life. If I would have told you that you had a touch, I don't know if you remember this touch, if you were a BlackBerry user, but if I said there was a touch screen on your phone and you use the touch screen, people are like, oh, I'd never use a touch screen on my phone. No, I can't
That
do
is,
that.
it's funny.
Like,
That is how I felt because I had a BlackBerry. I had that BlackBerry World phone that I had forever that I liked, and then I was very slow to switch to the iPhone because I liked having that keyboard. I thought
everyone,
I could type really well on it.
we were long BlackBerry and then very short BlackBerry
Yeah,
because
yeah.
everyone loved the keyboard. But so I say this to people. I want to make this about stocks because
Yeah.
again, you don't have to be the pioneer, but I encourage you to throw yourself into these types of experiences because it will change your perspective on investing. And then when you're looking at different investments, you're going to be like, wow, okay, now I get it. But I wrote a report that I don't know. We literally had 3 million people download the report back in the day.
Mhm.
But yeah, now I get it even more because it's here. So and the stock, I will tell you. Let's talk about the stock for a second.
Yep.
So it's been a terrible stock. Well,
Yep.
it was a terrible stock, then it had a run, and then it's been a terrible stock again. The reason it's been a terrible stock is the numbers, and people familiar with the Maverick are familiar with the earnings revisions chart. They've done nothing but go straight down.
Yeah.
I'm actually very intrigued with Tesla here. And what I'll say is this is if I take a 6 month, 12-month, 18-month, 24-month view, and it doesn't go out of business, it's going to go up fourfold. And I don't think it's going to go out of business. They've got plenty of cash, et cetera. He could go out, issue some stock, but I'm very intrigued by the potential. And it's not just about autos; it's about taxis and robots and all these
Yeah.
other things. So I actually think Tesla is an interesting. I hate buying things that have just negative earnings revisions, but at this point, it's had negative earnings revisions for so long that I don't know that it matters.
Okay.
Certainly as a 6 month trade, and I think he's going to step back from the government in a much
Yeah.
bigger way than even people expect. And I wouldn't be surprised to see this stock. I mean, heck, it just went from 225 to 300
Hmm.
in a week. I wouldn't be surprised in 6 months that we're at 350, 400, something like that. So I think it's a very interesting intermediate term buy for a lot of reasons. There's a
Yeah.
lot of, and I'm going to say something strange. There's a lot of narrative optionality. People always think of stocks and say, well, I'm buying the company. Well, you're not really. I mean, you don't
Yeah.
get any of the cash flow. You don't get any of the assets. They're not coming and bringing stuff to your house. You're buying a story. And to me, this is a story that I think can heat up a lot. So I was probably the first time, and it has nothing to do with buying the car. First time I've been interested in Tesla stock in quite some time.
As long as Elon is involved in Tesla, I think it's always going to have those factions of super long, super bullish Elon and super short, I hate Elon. And I think those forces are helpful when it comes to trading because this is a stock where you can definitely trade the extremes. And we've talked about the spike selling and things like that with Tesla. And I love it when I see things get super negative Tesla when it seems to be setting up like it was last year. I think we both you and
Yeah.
I we weren't discussing it, but we were trading it in our own way last year. And I think it feels like it's setting up that way again. Now, I think that is dependent too upon how the overall market looks as we're bumping our head into this resistance here. But I like Tesla. If it can get above, I mean, it has this nice area which seems to coincide with the 200-day. If we can get above $300 right here, I think it's a good swing. It's probably a good trade, a position trade over the next several months, like you're saying.
Well, and this gets to the juxtaposition, and maybe I'm skipping ahead, but where the market is right now, because I think it's a really difficult place
Mhm.
for people to understand. And maybe pull up the S&P 500.
Yep.
I'm just pulling up the chat here. Is that we had a defined uptrend. It had a material break. I'm just talking technicals. We could tie it to fundamentals, but it's honestly that's not very useful. It got crazy oversold. The fear greed index got to 4. Okay, that's the CNN thing. That got to 2 during COVID. So we were basically we got COVID. Okay, and then it did it so quick. It just had to bounce. It had to bounce. And when they bounce, there's symmetry in the markets. It's a fierce bounce. There are two interesting things about the bounce. The first is that the bounce has been so strong and so many breadth signals. This is the Zwag breadth signal. There's a whole bunch of these. We went through a bunch of the Maverick, that it says to me that the market's not really broken. Okay. But the second is that every piece of data we have, and we're going to go through a bunch of these in the Maverick, like going back 40, 50 years, things that look like this, they go lower from here. So we're in this weird spot that's, it's kind of like what you said about Tesla is like, I think Tesla sees 225 before it sees 350, but it's probably going to see 350 in 6 months. And that's kind of how I feel about the S&P, right? Is that like, I think it's almost a guarantee, and it may take, I think it's going to take 2 to 4 weeks that we see 5,400 or 5,300 or maybe even 5,200 on the S&P. Okay. And then we move back higher. Why? Because that's what's happened in this situation over and over and over. And if you also think about it, I was thinking about this today, just think about the narrative. We had Trump's kind of talking about tariffs, then Liberation Day. Trump's kind of talking about tariffs, the market's kind of going down, Liberation Day, and then, excuse my language, shit just went wild for like, a week or two.
Yeah.
And then we bounced back up. But now we've had him walking things back some, numbers coming out pretty good for Q1, and there's going to be some deals announced. But what's going to happen next is some deals are going to get announced, and I think it could push the market back up to that 200-day moving average up at 57.50. But then in all scenarios, and it's very similar to COVID, their Q2, Q3 numbers are going to suck. Like, I mean, we're seeing what's happening in LA. Like, I mean, the data's right there in front of you. So, I'm looking at this, I'm saying we've got technical patterns that we've seen over and over and over, and we've got a fundamental narrative that I think you get some deals, push it higher. We got FOMO coming in. Everyone wants to get in there right now, but then we're just going to have a torrent of terrible numbers. And it's not like the companies are going out right now and saying, oh, Q2 is going to be down 37%. They're saying, we don't know. Well, they're going to know, and they're actually going to know. It's May 6th. They're going to know in about 3 weeks. And that's what there's my prediction. That's when the market turns right over, is in 3 weeks, because we're going to see a bunch of pre-announcements, for companies that have guidance. And I think that's the buyable dip. But it's this weird thing of like, I wouldn't touch most stocks with a 10-foot pole right now. I might even go short, which is rare for me to say. I'm very bullish into year end and after, but I think we've got some technical work to be done, and it's gonna tie into fundamentals. We're gonna miss numbers. It's absolutely, and it's not in the price at 56.28.
Yeah, I mean, looking back to last week, since we didn't talk, the mags, the earnings actually, they weren't that scary. I think maybe that the relief valve was on, and we were able to kind of crawl higher there because everybody was expecting, like you were saying, there was that expectation in the back of our heads that like, oh, they're going to say something super negative about guidance or whatever, and no one really did. Like, I think Amazon maybe a little bit, but everybody else seemed to be kind of in line, and
there's a perplexing juxtaposition though with the Mag 7. Is that as a group, I mean, you've got Apple, Tesla's just its own thing. Like,
right,
you got Apple that does have some legit exposure. I'm not sure what the Amazon exposure really is, because, they sell a lot of everything. AWS, I just saw a statistic that AWS does more revenue right now. Let me find this. Basically does more revenue than 478 of the S&P 500 companies. AWS does alone. But for this kind of situation, the Mag 7 are pretty well positioned, because they're just not, Google's not impacted, Meta's not impacted, and I've been saying this on the Maverick, because I've been a big fan of Google, which I still am. I said, they've been spending so much money. in the last, hold on, Amazon AWS, the last 12 months has done 12 billion of revenue. That's higher than the revenue of 468 companies in the S&P 500. So, and that doesn't really get impacted by the tariffs. So the funny thing is, I actually think the Mag 7 are going to outperform the market in this next downdraft. They underperformed before because they were so overowned. They ain't overowned now. And I think the relative earnings power, like I'd thrown in the Maverick maybe 2 weeks ago, that chart that showed that the Mag 7 were predicted to grow like 12, 13, 14%. The S&P, the 493 were expected to grow like 2%. I think that number is going to be 12, 14% and -2 or something like that. So I've got a crazy call. I think the Mag 7 are going to lead this market for the next 6 months.
Well, that kind of makes sense. That makes sense to me, though, because there's also the perceived safety in it as well. If conditions remain relatively volatile, let's say, headed into the summer, then why would I not want to park my money in Google as opposed to some growth name or something like that? It just makes a lot of sense to like gravitate toward those quote unquote safer names. And then
they've got 100 billion of cash. They're throwing off 100 billion of cash. Like, it's yeah. But let's talk about Palantir. With the, I'm sorry, I'm getting flustered there for a second because I say it so many times. It didn't matter what Palantir was going to report.
Right.
The stock was trading at an RSI of 82. And from the intraday low on April 7th, the stock, that intraday low was 66. The stock had doubled in a month. It doesn't matter what they're going to, and by the way, it doesn't matter so much what even happens now. The stock's headed back to the 50-day moving average. And this is when I tell you, and you use this in your trading too, we're much more aggressive with it, is like using overbought, oversold, even in the context of an uptrend. You can just sort of predict what's going to happen. The narrative is going to follow the price. So now the narrative is like, oh, well, it was at 110 times sales, so it had to sell off. No, it was just
didn't matter 2 weeks ago.
It didn't matter. Well, yeah, it didn't matter. It was 180 times sales, 60 times sales. Who cares? What mattered was it was up 80, 90% in a month. And stocks that go up 90% in a month on no news, when they give the catalyst, they trade off. It's a super high probability bet. So, by the way, I love what Palantir's doing, meaning the whatchamacallit, the stock. I think it could trade back down to 80, and we're starting to set up a really nice tradable range. So I have more moving averages on mine. I've got the 50, the 100, and the 200. You get back to that 80 level, there you go. That was the 80 level that it first breached back in December off that breakout from 40. Okay. And now we've tested around, we've consolidated around that level for 6 months. So from a trading perspective, because the numbers have been really good and I don't care about valuation, I'm a buyer Palantir around 80, 85. Now you'd say, oh, of course you are. It's at 108. Wouldn't you? Well, I mean, come on. It's still going to be at like 78 times sales or some crazy number. But this is one of the stronger charts in the market. It's very viable, but I would not buy this today.
Yeah. And even heading up toward earnings, I mean, we're at a logical spot here. Like you said, extremely overbought. And then also right up by those February highs. I mean, heading into earnings, it was like, even if it did get a positive reaction, it was just destined to have one of those candles where it could gap up and then immediately close and go lower. It's like,
and I was busy yesterday, and I'm kicking myself. This wasn't like I was busy doing work and stuff like that. I was like, gosh darn it, why didn't I put something on social saying it doesn't matter what Palantir reports, it's going to trade down. But I think that like I said, I think Palantir's a really, it's the craziest thing. The Trump tariffs in some ways have taken what would have been areas of strength in the market and turned them into areas of at least momentary weakness. And they've refreshed some of the winners of 2024, like Palantir, like certain members of the Mag 7. It's given them a second, wind from a demand perspective that wouldn't exist without the Trump tariff volatility, in my opinion.
Yeah. Looking at like the cues right here, I know you mentioned, man, my charts are really slow. There we go. I know you mentioned last week you were selling more TQQQ into this rally right here. Is this a spot where you would want to try to put on a short, or are you waiting for more?
It is. I'm right there.
Yeah.
I'm right there. And I got to tell you, it's funny because I've run the strategy we run at the Maverick. I've run it for a half a decade now. It's a strategy based on, my 30 years and all that. I very seldom am willing to go short. Like I know how to make money. I know how to make a ton of money long in a bear market. I'm really good at that. Like, with this counterpunch strategy, it's actually some of the best. And by the way, I'll say a little bit here. The Maverick right now is sitting at like a 78% hit rate since inception. We're beating the market by like 15%. Like we traded up, like we did a good job of trading through this thing. I normally would not consider going short, but the setup here has gotten to such high probability with the technicals. I'm going to go through this tomorrow in the Maverick, as well as sort of the narrative setup, that I debated it. I just feel, you know what I want to short? I want to short the first couple trade deals, because I do think those are going to happen in the next week or 2 or 3. And I think that'll push us up towards that 200-day moving average. And then, by the way, in 3 weeks, if things kind of do trade up, your 100-day is also going to go through the 200-day, so you're going to be at a very tricky spot. So I'm getting close. I'm getting close. And, Jeffrey Tarr, the option strategies might be a pretty interesting way to do it, just to take advantage. But the other thing too is volatility echoes. So it just would be almost unprecedented to see the extended period of VIX volatility that we just went through, the magnitude and duration of it, and not see some sort of material echo with the VIX headed back up above 30. Yeah. Like it's just, it would be very, very unusual. I don't think it happens this week. I don't think it happens next week. We're working off an overbought signal now, and we're still, on the like the 50 week kind of thing. We're still oversold. But I'm a seller of the trade deals. I'll say that. That's actually my catalyst. I think when we get these trade deals, whatever we get, Japan, Korea, like, or, whatever, UK, I would actually be a seller. And Robert Stevenson, you could be taking the SQQQ is one way to do it. So
yeah. So do you think, and I know this is just guessing, obviously, at this point, but do you think the market is going to react unfavorably to lesser trade deals? I think all it wants is China, right? Like that's the main one that it wants to see. Do you think it would
China ain't happening. There's no scenario that I think logically China's going to happen for many, many reasons. I think that you could see some material trade deals, Mexico, Japan, they'll actually be anti-China. I think the Mexico deal in particular is going to basically be like half of it's going to be about China. I think the market is going to initially respond positively to that. And that's the right response. These will be great deals for our long-term financial health. But at that point, you're going to kind of have exhausted your positive catalysts, because you're going to get a couple good ones. And then after that, all we're going to have is 3 to 6 months of numbers going down. And that'll be what drives the retest. I think in 3 weeks, 4 weeks, we're going through earnings season right now. We'll be in pre-announcement season in four weeks. I mean, we're almost through earnings season. And I just think you see a flood of pre-announcements because of LA. It's not so hard. Like, and that stuff moves like in a delay. So there's no products coming in that's telling you that economic activity is slowing down, and it's just going to run through. Right now, your stores are full. And I'm not saying there's going to be shortages at the stores, but you can't have the freight traffic go down 90% for 3 weeks and not get volatility in the numbers. It's just a mathematical equation, because it ain't going to start up with China quickly. So I'm actually super constructive and bullish, but not for the next 30 to 90 days. I think it'll get nasty. People, like right now, what's also crazy about this is that people remember the high. They feel that like we were in buy the dip for 18 months and buy every dip, and there were no consequences, and you could impunity, layer on leverage, options, blah, blah, blah. And that's still the mindset. It's like we're coming out of summer, right? And we've just gone into winter. We went straight from summer into winter, but you get those 3 hot days and you're out in your shorts and you're like, put the top down on the car because you remember summer was just here, in February, but it ain't summer, folks. It might be in another 6 months. So, but it's just it's mental mapping, and so I think this is a very dangerous point in the market, for investors. But the investors right now, they have an incredible weapon. Okay. The single most powerful weapon you can have in a bear market or in a period of high volatility. Guess what that weapon is, Greg?
Guess what that weapon is?
Yes. Guess what I'm going to say?
I don't know. Tell me.
Cash.
Oh,
cash.
Okay.
Be
Fair
sitting
enough.
on cash in your trading accounts. Be sitting on cash and just wait. Just wait, because we're going to have a stupid day. And we might have a stupid week and we might have a stupid month. Wait for the stupid. And when I say that, I mean, wait for the market to be down, the VIX to go backwards, because it's going to happen. It's just super high probability at this point. And the worst thing that happens if you're sitting on a big cash position, waiting for that, and the market keeps on going up and goes back and gets back in an uptrend. Well, you missed that, but now it's back in an uptrend. Now we have a well-established uptrend and we're going back to what we were doing before where we were making a lot of money. So it's so hard right now for people to wait though. But since April 9th, I did something like, the market's been up like 80% of the time, and or maybe it's been up 70%, but on a breadth basis, the market's been up like 85% of the time.
Mm.
So it feels like it'll never go down. We just had 9 up days in a row, right?
Yeah. Breaking records.
It's not a head fake. It's not what I'm saying per se, but I'm just saying that there's a lot more volatility in front of us that you have to be respectful of before we get to the real clear sale.
Yeah. I mean, aside from all of this and the obvious areas of resistance, from maybe a squishier, more sentimental point of view of the market, do you think that like this reaction from PLTR, do you think this is like setting the tone for kind of the growthier earnings that we're going to be seeing this week? Or
no.
You don't really like that?
I think PLTR is setting the tone for any stock that's up 89% in 30 days.
That's a fair answer.
So because there weren't many stocks like the growthy stuff, there's not many stocks that look like PLTR. So there's plenty of stuff that's done well, but I think PLTR is its own thing because nothing had that. So PLTR is just a natural rule of physics. Stock goes up 90% in a month on technically no news, and then reports great numbers. It's probably going to trade down before it trades back up again. So, and I don't think, curious to ask you, what would you put as the other growthy names so we say PLTR, what would be next on your list of growthy names that you would say are kind of in that group?
Let's see what's reporting it's probably not really growthy, but like I feel like these are trading stocks. Like AMD reports tonight, and people love to trade this one, and it's kind of I feel like this is always kind of a dead stock walking. Maybe that's unfair. Just the non-mag type tech stocks is what I'm talking about, and I feel like there's a bunch of them. Like what's another one? Like I don't know if it's reported yet, but like App is one. I think that reports. When does that report? Does that report tomorrow night? It's not exactly the same as like a PLTR, but I feel like these are the traders stocks that everybody sort of comes on to.
I actually, so the funny thing is I look at App and I'd say it's more likely to go up than down. They're going to report a great number, and the stock is in a consolidation here. It's well off its highs. Even if I don't use that 500 silly number, if I use the 400 number, it's 25% off its highs. So like I just using a pure trading hat, I think App will probably be up. I don't think it's that kind of Palantir is just its own situation. And I think that the rest of these, I just think they're their own situations. AMD's a chart of death. and has been reporting bad numbers. And with the stock up, I would guess that AMD goes lower. Like, the stock's had a pretty good pattern. I'm just pulling up the last earnings report. So AMD, this is bad. Like, I'm looking at 5-11. Is that like of the last 11 reports, the stock is traded down on 8 of the 11.
That's a good stat.
That's why the chart looks like that.
Right.
AppLovin, let's go over there, do this on the other side. AppLovin, the last 6 quarters, has beat earnings on average by 30%, and the stock's been up on average 20% on the report. So until I see otherwise, I'm going to say AMD is going to trade down and AppLovin will trade up. I kind of like, and AppLovin's done it 5 quarters in a row. It's actually traded up 20% or more, 15% or more of the last 10 quarters. It's traded up 15% or more, except for 1 quarter where it traded down 1%.
Mm-hmm.
I feel like I should go buy some AppLovin options or something now. That's those are, and again, it's not voodoo. There's reasons for that setup, but those are nice setups if you can find that.
Sure. So when we're in a situation like this, just to shift gears a little bit, but to try to melt it into what you're talking about, where I feel like we're running up against resistance, I try to find places to hide out long if I can. And one of the trades I put on just to start this week was I bought some GDX calls. I was feeling bearish gold as it was kind of leaking off of these highs right here, but I quickly changed my mind on this one because it started roaring higher on Monday, and I felt like I could squeeze some very short-term gains out of this move, because I felt like if it's going to go, it's going to still go. It's going to still go, and with the market being a little bit squishy, then I'm cool with being in something like GDX and get what I can out of it. And it was a really good entry for it. Is there any spots? And I know you probably aren't looking at gold, but are there any spots in the market where you can hide out right on the long side?
We're involved in gold.
Okay.
At the Maverick. I don't know if you knew that.
I didn't.
Yeah, I don't want to say what it is because not everyone here is a subscriber to the Maverick. We'll just say we're not on the same side you are.
Yeah, that's fair.
and we're up on it because of the timing. Look, I think that a couple thoughts go through my head. Number one, there's an old saying on Wall Street: picking up pennies and nickels in front of a steamroller. Yep. So I'm just naturally pretty cautious to, your greatest power as an individual investor is you don't have to do anything, right? Like that's Warren Buffett. There was a couple articles that came out, that made this point about Warren Buffett. One of Buffett's greatest points: if you're a professional money manager and you were sitting on $380 billion of cash, you'd lose your job. You'd be out of there in 30 seconds. But he can sit on $380 billion in cash because he's Warren Buffett. He can take his time. And that's the power that all of our readers have. Then if I kind of went down that list, I think short-term setups into earnings. I like that AppLovin trade, is a nice trade. Companies that are going to blow away numbers. Constellation reported strong numbers today. If you can find companies that have great histories of beating numbers, you're good for a day or two into that number. And then I think you could do some trades like what you did with gold, like a nice little counter trend into a bull. But I got to tell you, gold's literally one of the few things in the entire market that actually has a identifiable solid bull trend. There's the other thing that I would put in there that's pretty interesting. That's kind of not as good as gold, but Bitcoin.
Yeah, I was going to ask you about that too.
So I think, look, what would be my advice here? Mostly sit on cash and just wait for a sweet spot. But I think you can trade into earnings reports like Constellation, like AppLovin, where you have high confidence. Don't buy something that's got an RSI of 82 and up 100% in 30 days, a la Palantir. And then what you can do is you can tactically trade things that are in identifiable uptrends. Bitcoin and gold are the two that come to my head in terms of things that are there. But for the most part, I just what these periods do, these high volatility periods, they grind you up. And that's
Yeah.
why after all my time, so there's a thing in Wall Street when you're running a hedge fund, there's something called gross exposure. So when you're running a hedge fund, you can go out, let's say you've got $100 million. You can actually have 200 million dollars of stock on, but have zero exposure to the market. You got 100 million long plus 100 million short. Okay. Now what happens is you still have exposure to the market, if your longs move more than your shorts move, etc. But what happens during these periods of high volatility, inevitably exposure gets you somehow. Like everyone's making money short, and then April 9th comes and the market goes up 11% or 9% on the S&P 500 in one day. So I'm just telling folks, like, with volatility heightened like this, be calm, be patient, wait for your pitch. That's the thing, is we can't. And I wrote a whole note. Did I publish today? I don't even remember. But about like this whole baseball concept of waiting for your pitch is really great hitters know that if they've got a good pitcher, they can't hit their curveball, their changeup, and their fastball all in the same at bat. It just ain't gonna happen. The pitches are too good. So you got to wait for the pitch. So that would be the one thing I would say in this market. Just have your plan, have your setup, plan the trade the plan, and stick to it. And right now it's challenging people because of the FOMO, because that's what 9 days in a row does, right? It's, I should have got in. No, every time you say that, like, just go for a walk, and I'm almost getting close to getting short. So.
Well, I'm looking at Bitcoin here, and I think it's in a very interesting spot because the next move is going to tell us a lot. Like, if we have a situation where we have the major averages going down, and if they move down, I don't want to say dramatically, but if they move materially lower from here, and Bitcoin is still hanging on and pushing higher toward 97, 98, I think that's really important information, since it was doing so well and it seemed to have at least temporarily decoupled from the NASDAQ, which is, it wasn't trading lockstep with it, but it has been a tech trade in the past, and now it's becoming something different, possibly. Correlations can change, but if we have a situation where stocks are down and Bitcoin is up, that's definitely intriguing to me and telling me that I need to be doing something on the long side in crypto.
I am, so I'm not interested at all in crypto, but I'm very interested in Bitcoin. I've been on record that and you're exactly right. I think that depending what happens here on the retest, what's happened recently with Bitcoin and in 2025 may be one of the most important periods in the entire history of Bitcoin, because for the first time it acted truly gold-like at the end of April. Like gold pulled Bitcoin up, in my opinion. Gold was breaking out and it pulled Bitcoin along with it. That's that move. And by the way, it was hinting at this because normally, I'll tell you this. So both the S&P and 500 and Bitcoin were at the 200-day moving average going into Liberation Day. Okay.
Yeah.
So I'm just doing the chart here. Bitcoin went below the 200-day moving average. At its low on the 8th was at 77,000. That's down from 87,000. So that's about 12%. Mm-hmm. But the S&P, let's pull up the NASDAQ. Hold on one second. Now, the problem is they're very different volatility. So 12% for Bitcoin is not a lot. You'd have to compare it relative to volatility. But the NASDAQ, the NASDAQ went 14,784, 1844, 4,000, 25% below the moving average. So on a relative, if you would have told me that the NASDAQ was going to be 25% below the moving average and that Bitcoin was going to hover around the moving average, I would have been like, no way.
Right. Yeah.
But was hinting at it. And then as the volatility continued and gold broke out, Bitcoin broke out with it. So it's very interesting. I think we're seeing the evolution of Bitcoin. I don't know that we're seeing the evolution of anything else, because I just don't think that there's the institutional bid for Ethereum. I don't think Bitcoin's a crypto story anymore. I think Bitcoin's and look at the chart of Ethereum. Like, that chart looks like, death.
Yeah. No, I hear you. Yeah, that's an excellent point. Yeah. I guess we shouldn't be trading Fartcoin right now. We should be looking into Bitcoin. But maybe Bitcoin is
graduated.
Yeah. Yeah, I like that. It's graduated. It's becoming the thing that they've always told us it was.
Well, they told us all this other, cockamamie story about like, the decentralization and like all this other stuff.
Right.
Bitcoin's just digital gold. Gold is just physical Bitcoin, in my opinion. And
Okay.
now they're acting like it. I was driving today. What was I? There was something on CNBC, and they were talking about how back in 2007 asked to be paid in euros for some concert that she did right before the global financial crisis.
Okay.
And
Yeah.
I was like, damn, she should have been asked to be paid in Bitcoin. Now I think that was pre-Bitcoin. But my
Right.
point is, remember all those like athletes that said, be paid in Bitcoin. And then I was like, I'm going to call Matt, see if I can get paid in Bitcoin. He's just going to say, well, just go buy Bitcoin yourself, you idiot. Yeah, it's graduating. So I think you can trade things that have these identifiable bull trends, Bitcoin and gold. I think you can take shots on things that are going to beat earnings, but I would keep my exposures tight, keep my cash high and wait for that fat pitch.
Yeah. Um, on the other end of the trade spectrum, China stocks are still looking pretty darn interesting. Do you have any opinion on them or is that something you want to trade, or is that just an area where you're like, I'm not dealing with that right now?
They scare the living bejesus out of me.
Is that a good thing or a bad thing though?
No, it's a bad thing. Like
Okay.
I don't. What's happening here at LA is happening 10 times more in China.
What you're saying, you're talking about the ports, right?
I'm talking about the ports, but I'm reading stories out of China and these factories, and they're starting to talk about riots and things like that. And so it's just very I've got two problems. So prior to Liberation Day, I loved it. Liquidity, like, under-owned, all kinds of great stuff. But technicals can get overwhelmed by, fundamentals.
Absolutely.
Technicals are, how would I say this? I say narrative follows price, but that's in the short term. In the intermediate term, uptrends and downtrends are defined by fundamentals. Companies that miss numbers for a year, their stocks go into a downtrend. Companies that beat numbers for a year, their stocks go into an uptrend. That's how it works. And I just struggle. I think there's going to be tremendous economic volatility in the numbers that are going to be reported by the Chinese stocks. Now, K-Web, maybe a la Google, does better. But I think if you have anything that's tied to the real economy in China, I'm concerned. I mean, PDD, man, like, whew. And PDD is an awesome business. I did a write-up of PDD last year. They've had one of the greatest growth trajectory. This is Shein, or is it Temu? I forget which one they own. Which one do they own? It'll come to me in a second here. But they've had one of the greatest growth trajectories of all time. But like Shein and Temu are absolutely in the cross. They own Temu, in the crossfire of what's going to happen here. And so it's one thing to say to me, like, let's go to that PDD. And I made a lot of money trading the stock. Buying PDD below 90 with an RSI of 26, and numbers are going to be terrible. That's one conversation. Buying PDD at 112 with an RSI of 60, punching up towards 80 when we know numbers are going to be terrible, that's not a good trade. I just wouldn't do it. You don't need that in your life. And you can say to me, go, oh, well, the bad numbers are priced in. Well, again, with an RSI of 26, I'm willing to give that the benefit of the doubt. With the stock having traded up almost every day for a month, just don't do it.
Yeah, that's fair.
Why? It's just like, you're sitting on a 15 against a dealer 6. Like, that's a nasty hand. It's like, don't play. You don't have to play. You don't have to do it. Go trade some gold or go buy AppLovin. Here, I'm saying to buy AppLovin. It's not a formal recommendation, mind you. But they got a great track.
Enrique says put your life savings in AppLovin.
Well, my girlfriend owns AppLovin, and she bought it and made 8 times her money, and she can't stop telling me about it. She's like, because I looked at it, I'm like, I don't know, it's fine. And it's like, oh, it made 8 times my money in 6 months. I'm like, yeah.
She's gonna start a rival service.
Yeah.
I like K-Web. I wish I had bought it as it was filling this gap right here. I'd like to see how it digests now that it's filled this big gap down from, I guess that's Liberation Day. Like was Liberation Day yeah, it was the
Mm-hmm.
Wednesday, right? So that makes sense. But yeah, I'd like to see how it digests here. I think it could be a good short-term trade, maybe. I think maybe our time frames are different. And I think that's important to talk about too when we talk about things like, because we're on different
Well,
sides of gold right now. We're talking time frames,
yeah,
we're
I think the next 2 weeks you're tradable, maybe 3 weeks. But I think that you're playing, it's picking up nickels in front of a steamroller. That's and hey, if you're fast and you're clever, you can do it. Buying App Lovin in front of the earnings is picking up maybe a quarter in front of the steamroller. If the steamroller doesn't hit tomorrow.
yeah,
But it's just I don't like and this is my style is I'm constantly looking at the table that I'm walking up to and saying, what's the setup?
yeah.
And 3 months ago when we started together, we were in a clear uptrend. It was kind of boring, and then we sit there and we could just talk about stocks all day.
Right.
Because like I don't know, like there was a little bit of like, are we the bottom end of the trend or the top end of the trend? And like, is it how overbought, oversold? But it's like 10% of our conversation right now and this is also a lesson with the VIX above 2025. The market's going to dictate 50 to 100% of the movement of individual stocks.
Yep.
That's how this works. So you can't not have a view. Like you have to be willing. You got to put this into your mosaic if you're going to trade this market. And this is how would I say this? In some ways, these markets are easier because markets that are trading at extreme levels have very identifiable patterns that have occurred in the past. The problem is if you get it wrong, the price that you pay is 2 to 10 times what you pay in a normal volatility market.
Yeah.
So, your plan's much more important. It's unforgiving, I guess, is what I would say. So I like them because we know what these patterns are, but that's why I like sitting on a big old pile of cash versus in a low volatility market, I want to have 20 positions on.
Sure.
I want to be harvesting the trend. Here I want to harvest volatility by fluctuating my cash up and down.
So the one last big theme I wanted to talk with you about today, and this is more philosophical than anything, is speaking of cash, is Warren Buffett stepping down. And for the record, I too am planning on retiring when I turn 95. So I just want to put that out there so no one's disappointed.
But only if you have $100 billion. If not, you got to keep working, buddy.
I don't know. I think no matter what I 95, I'm gonna be calling it quits. But you know, as much as Berkshire is such a legendary firm, it is a cult of personality too. With Buffett, do you think that that is going to change in the longer term with Berkshire, with Greg Abel taking over, and it'll have some of its mystique gone from it with Buffett taking a back seat, or do you think it's still going to be the Berkshire that everybody still loves and treats
Well,
the Rolling Stones when they come to
I
town?
don't know whether we're really supposed to talk about, colleagues, competitors, but I'm going to tell you that my old colleague Porter Stansberry has an incredibly interesting analysis.
Okay.
And his analysis shows he's a, Berkshire maniac, like my old, partner Whitney Tilson.
Hmm.
And he basically put together an analysis that showed the derivation of all the returns for the last 25 years for Berkshire. And Berkshire has absolutely crushed it in common stocks, in
Hmm.
particular Apple. They have had terrible returns in their energy business and all the stuff they bought 100% of. He basically lays out how they invested 100 billion of not taking a single dollar out and basically finance those businesses, and they're like, because they're energy intensive, they're capital intensive. And Abel was the guy who built that business.
Hmm.
So I think Porter's got a very, very interesting, well thought out insight that is mathematically based, that cuts through Porter's a very smart guy.
Absolutely. Hmm.
He just cut through the gleam. And his point, and and again, I'm really not supposed to do this, but you subscribe. He's got a free letter. A lot of us do. In there, he lays out the case, and he just says Buffett was the common stock guy, and they did great with common stocks. And Abel's investments have done, some of the other things have done okay. Well, Seas Candy and all that, the old stuff. But Geico's gotten its butt kicked, like the energy business. So I think if that happens, and so they've talked about Abel being more focused on buying entire businesses, I'd be concerned. I just think that the combination of just the returns not being there and losing Buffett, I'd say more on a 5-year basis, though.
Yeah, that's what I'm.
Like,
that's what I'm thinking. Not immediate.
Yeah, but I don't like if Porter makes I haven't gone through and dissected Porter's numbers. I also trust Porter's work enough that I know I don't need to. Sure. But if you just read Porter's case, then it's not at all bullish for whatchamacallit. It's actually quite bearish.
That's interesting. I'll check it out. I assume it's on Twitter. Did he post it on Twitter?
He's Porter and Co. He's got a free newsletter. I think it's free. I don't know. I get all his newsletters. I don't even know that I signed up for it and I get it. I guess that's what happens when you do what we do. But I step out because I normally wouldn't do that. Not because I don't respect Porter, but like I have huge respect for Porter. I step out because the insight is that unique that it deserves to be called out. So I think it could be challenging for Berkshire.
Oh, that's interesting. Yeah. I think
I'll send it to you.
Yeah, for sure. I'm definitely interested in that because it's funny. Like last week, I was talking with a colleague, and they just mentioned like what happens if Warren Buffett dies. We weren't talking about retirement. This is before that it came out. And I think it's funny that it happened over the weekend. And I texted him and I was like, well, now we're going to find out like what happens.
I actually, so you bring up some point, and I got to be honest, I haven't even thought about it till now, which doesn't make any sense because obviously Warren Buffett's, the probabilities of him living another decade are relatively low. I think if Buffett dies, or when he dies, I mean, we're all going to die, right? Stocks are short, honestly. Like, I think the stock trades down 20-30% and it'll just grind down. I think it'll just go. Yeah, actually, when Buffett dies, Berkshire might be a spectacular short. Because I just think you're just going to have, it has nothing to do with fundamentals. It's just, it's narrow. It's like Tesla. Right. That's what it's like. If Elon Musk dies tomorrow, Tesla gets cut in half and goes bankrupt.
Absolutely. Yeah.
And so we're buying stocks. We're not buying companies. And that's something I say to people, and they're like, oh, Amazon has never paid a dividend or bought back or barely paid a dividend, barely bought back any stock. Yet the stock's gone from 22 cents to, where's Amazon stock right now? So you don't own the company. You own a piece of paper. You own an NFT. A digital certificate that says you own a piece of this company, that you only find out that you own something if it goes bankrupt or it gets bought by another company. That's the fact of owning stock. It's the fact of owning Berkshire, by the way, which doesn't buy, but has not bought back stock or paid out a dividend either. So narrative matters. And unfortunately, I think if, when Buffett passes, it's going to be very bad for Berkshire stock. So.
Okay. That's good. I think we've had some good calls so far today. It's getting to be that time where we say goodbye.
Sorry we didn't hit any stocks. There's a whole bunch of people here that there weren't that many names. People were just asking why are the IPPs, Vistra, Talon all doing well. Constellation had good numbers. Those companies are going to do great. So I did want to address that. But
I think this big market stuff is really important at a time like this when we had that historic rally, that winning streak in the S&P, taking us right back to the starting line of Liberation Day. And now it's time to, really hone in and get tactical, like you were saying, having that big cash stockpile ready to deploy when you need to. Thinking about going tactically short at a time like this too, I think is really smart. And just like, knowing where we are in the markets, having that roadmap is critical. It seems like this heightened volatility.
And just remember that with the VIX above 20 on an extended basis, the VIX goes above. So look, the VIX went above 20 back in August and stayed there for 6 days. Who cares? Like, it was very interesting when it happened. But with the VIX above 20 for for an extended period, you just got to play different. You got to play different. It's like driving in a rain. It's like driving my Tesla in a rainstorm versus driving it on a nice sunny day. How about that? You know, and we're your FSD here. You know, Greg and myself. You know.
All right. Well, enjoy the Tesla, and I'll be asking you for some updates on that too. I have yet to experience.
I hope they're good.
I have to experience a full self drive. I've never done a Waymo either. I got to go take a Waymo at some point.
I lived in Arizona, and they were doing Waymos, but they did them all down in Gilbert, and I don't know where you live, Holly, but I don't love. I like Gilbert and Mesa are just not my jam. I'm a North Phoenix guy, so I never got to do the Waymos, and now they're all over. I was just there last week, and I started to see them, so I need to try a Waymo too. So.
All right. Well, thanks for all the insights today, Enrique, as always. And we'll be back next week, same time. And be sure for you Maverick people to tune into the Maverick tomorrow at what time, Enrique?
1 p.m. Eastern.
1 p.m. Eastern for the Maverick tomorrow. Thanks a lot for joining me, Enrique. Yeah. Take care, everybody.
Thanks, everyone.